Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for February 24th, 2017. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. We've seen an aggressive push higher over the last few weeks here. Since the beginning of February, we've seen an aggressive push higher in the ES. I've mentioned before that we really haven't seen many pullbacks at all. Instead, we've seen one-day holding patterns, maybe two-day holding patterns, and then we've continued higher. Right now, we're kind of in one of those patterns at the moment. We had a recent push higher, and we're sitting here over the last 2+ days, sitting between 23.50 and 23.65. Overall, what I mentioned to begin the week is watch 23.50 1/2. That's the previous week's high, and that's the current pre-market low. At the moment, any push below that level could be an opportunity to defend for bulls looking to squeeze for another round of highs. What I mentioned before was that we were likely in an uptrending market toward this primary target here. This is a long-term target we've had on the board for over a year, 23.76 half, and that's still a major target that the market's going to want to capture here. And again, any pullback likely to be seen as a buying opportunity. We don't know how much, if any, pullback we get. If there is a failure to hold 23.51 or 23.50, then the likely move is back toward the midpoint of the previous week's range. That's going to put you at around 23.32. So any failure to hold 23.50 perhaps rotates this thing down another click or two back toward 23.32, and that still would be an opportunity for bulls to defend and return back up. Right now, this is a very, very bullish market, so all pullbacks need to continue to be defending opportunities. Here's an intraday look at the ES at the moment. One thing that we were looking at the previous session was how price was going to respond above 23.65. Price pushed beyond 23.65, which is the top of the key range there. And when it dropped back below it, it made it resistance and proceeded to drop until it hit 23.53. I mentioned pre-market that coming into 23.55 would be an opportunity to look to defend and return back up. And eventually price did get back above 23.55 after bouncing off 23.53 and rallied back up. So still a back and forth range bound type of market, and right now we're back at the bottom of that range. We have a little bit of a sloping lower edge to this range here, and we're right into a major LVN over the last 5 days, 23.50. So between 23.50, 23.52, that's a zone here where bulls are looking to defend for a return back toward 23.60. Perhaps even into new highs between 65 and 68. Failure to hold 23.50 again could open up a return back toward 23.32. All right, let's take a look at gold futures here. A look at gold shows that gold continues to be very, very bullish, continues to push forward toward our 1263 target. So back when prices were below 1142.90, there was a box that formed down here. I mentioned to our group a push above that box could be very bullish, and we got it on this day here, a big time rally outside of that box. I mentioned if price could pull back and the market would hold 45, 46 half, then we could be looking at a continuation toward 80, 1200, and as high as 1240 and 1263 half. So it's been a long time coming. This is from December, and we're still working our way here, but we're almost to that 1263 target. That 1263 is marked up here as an MCV-POC, so I had it as a high volume node from a prior period of time there. And so we're working up toward that target. At the moment, the previous session, we saw a major squeeze day, so I mentioned to our group the pullback is likely to be defended for a continuation higher. We're in an uptrending market right now, in an up move, so pullbacks are still to be defended. Bulls want to keep prices, generally speaking, above 53s today overall. But for the most part, 45 is the main level to hold. We can still pull back toward 45s and still be a buying opportunity for a push into 60s and perhaps even beyond, because we're coming into 63 now. The next levels beyond that would be 68 and 80. Here is a look at the intraday time frame for a quick moment. On an intraday basis, you see how bullish this thing has been. We've seen gold get into those very, very unidirectional trending markets, And one thing to note here is that when you do see a very unidirectional trending market, pre-market, the tendency is to establish some sort of range and trade around or create value and balance at those highs. So we've seen a pre-market rally here. We may continue higher still, but at some point expect this thing to find a high, pull back, and then generate some sort of range. Perhaps somewhere above 53s, as I mentioned before. That's the level to hold. So we could pull back as low as 53s, be bought, and then form some sort of range. So at some point here, we may stop trending and start creating some sort of balance. All right, let's take a look at DX. This is the dollar here. Looking at the higher time frame chart for a moment, one thing you'll notice is that we've seen a major rejection off the upper end of the range here, and this is something I mentioned earlier this week to look out for. I mentioned that we have a nice key range that is formed, bounced off the midpoint, and that we were going to be looking for a reversal off the upper end of the range. I mentioned between 101.75 and 102. Price got to 101.71 half, so basically 3.5, 4 pennies off of our zone, and rejected hard. That's a rejection day here. This is a midpoint retest and a continuation, and we're headed all the way back toward 100 half. So that was the idea pre-market a few sessions back. I mentioned if price were to rally into this zone, look for a rejection and take it back to 100 half, with the potential to see a return all the way back to 99 half. That is also the selling idea that we brought up to begin the month of February. So I mentioned if there's a rejection, look for a rejection below the previous month's low and look to return it back toward 102. Should it get to 102, look to defend for a return back down. So we've seen that play out a couple of times now. And again, overall, downtrending market. If we look at this, let's just go down to a 60 minute. So this is an hourly chart. You'll see, again, very clear trading range here, 101.70 on the bottom end, 150. Right now, we just broke back below the 101.10s, basically. Breaking below there, making it resistance and pushing downward. Here's another break of support. So basically, we're in a downtrend until we reach 100 half. Once we get to 100 half, we may begin to see a bottom form, and we may see a bounce back toward 101.10, which is VPOC. All right, lastly, let's take a look at the NQ. The NQ has been very, very bullish overall, but we're seeing our first round of weakness here in a while. We've had one-day pullbacks, as I mentioned before, but we really haven't seen much. I mean, this is a one-day pullback. This is a one-day pullback. One day, hold for the most part, a little bit of a multi-day pullback, hold and rally. So this two-day pullback is quite large for what we've seen. The major level here was 23.36. 23.36, that was the previous session's low. And when price failed to hold that level, that's what opened up a move lower. And what I mentioned to our trading room is that any pullback into that previous low, 36s, would likely be defended for another round of weakness. And so far today, prices have rejected off that zone yesterday, and then today continued downward. So 36s are the major level to watch. Overall, still, any pullback should be looked at as a buying opportunity. So at some point here, we're going to find a low, and that may be an opportunity to bring it back up toward highs as this thing looks to establish some sort of range or value after the recent rally. But this has been a very bullish advance, and so while we may see some more weakness here short term, look for at some point a swing buying opportunity. Here's a look at the 36. Here's the 53.36 level, previous low. Price broke back below it here, could not get it back above. That led to weakness. When it came back to that level, rejected, and then here today, continuing lower. So again, this is the major level to watch for the change of bias for bulls, and overall, we could be looking at more weakness until we find that swing low. So selling pullbacks is likely the way to go. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck, trade well, and happy Friday.